Yeah, let's bring in our Bloomberg Intelligence Chief Asia FX and rate strategist, Chiu, watching this very closely. Should we make sense of this outlook cut?
I think the move is very understandable because everybody knows that the property sector woes, the LGF3 problem, it's not going to be resolved overnight. It will probably drag on entering 2024. So that's why, everybody has a concern, including the rating agencies. So as you said, fiscal is really doing the heavy lifting. So everybody is waiting for fiscal. Now they deliver. They're going to issue that 1 trillion yuan special CGBs. But on the back of that, meaning that there's going to be more problematic for the fiscal capability. So that's why the downgrade. Now, actually, when we look at China, we just talk about general government debt. We don't look beyond that. Even that, when we look at the share as a GDP, now it has risen to near 80%, just general government debt. It used to be 40-50, and it used to be the argument that China is saying that we are okay, fiscally speaking. But now we are heading 80%. What it means is it's above most of the EM markets, which is about 66%. It's still below the advanced economy. It's still below the US, which is like 3 digits. But for China, you can see the trend is actually heading towards more and more leveraging and higher debt. So that's why it makes sense.
And what does it mean for CGB prices?
Actually, it didn't really matter much. If you look at the CGB, the 10-year yield, it didn't really move much. On the flip side, it's good, of course. It's still stable. It's not reacting to the downgrade. But on the bad side, it's meaning that the yield is still pretty low because usually, if you have a sell-off per se, then you get higher yields. It could actually help the bond. But for now, we're still staying below 2.7%, which is just a huge gap compared to U.S. Treasury, meaning that it's not attractive compared.
Renminbi didn't quite move either.
Same as rate. For FX, it doesn't really matter because we are still talking about the rate gap over there. So if rates doesn't move, the currency won't react either.
Will the PBOC have to do anything today to aggressively try to defend some sort of level or anything, you think?
It's really the same thing. So fixed near 7.1, 7.11, still doing the same thing to keep the currency stable at least. But that's really it.
Okay, let's get more views there with Chiu a little bit later on. But thank you, our Chief FX and Asia strategist there.